So today we are going to cover a few more chart patterns, that is bullish reversal chart patterns and the continuation patterns. Yesterday we have learned the bearish chart patterns, and there are two additional ones which we are going to cover in today's session. So at a glance, if there is any bullish reversal chart pattern, what it means is that the after the reversal, the chart is going to be bullish. In a simple term, that there will be a downtrending chart, and after a certain point of time, once there will be some indicators on the chart, based on that, the trend is going to be reversed, and after reversal, the downtrend will become an uptrend. And how that will happen, how to identify on the chart, we are going to learn in subsequent slides. So the first bullish reversal chart pattern is called inverted head and shoulder. So yesterday we have learned head and shoulder, and this chart pattern is just opposite of that. So if you look at this example, and this normally occurs at the bottom of any chart pattern. So in the inverted head and shoulder, there will be a bottommost point that is normally treated as a head, and there will be two two other additional higher lows, which will be a left and right, will be considered as the left shoulder and the right shoulder. So, okay. So if you look at this one, the middle portion is the head, there is the bottommost point, and there are two higher lows, left and right, that we have marked as the right and left and right shoulder. And to identify the neckline, so we need to identify a point which is the upper to the left shoulder, and similarly right to the left shoulder. So once we identify these 2 points and we join them together, that will draw a horizontal line in normal. It could be horizontal line, or it could be a slanting line as well. In this example, this is neckline is a horizontal line. Okay, so and then once we draw a perpendicular line from the head to the neckline, that will form a depth. Okay, and that will be you can say that the first target in this kind of chart formation. So when this chart formation is happening, we may not able to confirm that, okay, this is the head and shoulder unless and until it is gets complete. And in that scenario, the 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 after the right shoulder forms, okay, and when right shoulder is going to break the neckline, that will be the ideal entry point. And I hope I have covered some, earlier in some of the session, or maybe if not, then just to reiterate that when we are discussing about this chart, like the bottom represents the horizontal one as a time, and the vertical one is the price point. So that means this chart formation is happening from the left to right. Okay, so left is the history and right is the future. Okay, so in that scenario, when we say left shoulder will form first, and then head and the right shoulder. So till the time the right shoulder did not get complete, we'll not able to know that this is the head and shoulder pattern. And once the right shoulder formation is complete, and then we know that, okay, this is the complete head and shoulder formation is happening. Okay. Is there any question from anyone that whatever we have discussed so far? Okay, great. So okay, so so once someone is want to take an entry, so the ideal point of the entry in head and shoulder formation is as I mentioned, when any candle is breaking out the neckline, and once the breakout is happening, then the distance equal to the from the bottommost point to the neckline, that is this much, the line highlighted in blue color, the D, is the, it will be the first target in this scenario. So that means if in an uptrending market, someone can take the entry here, that means purchase the stock or the future first, and then the first exit could be at D. Okay. And if it moved further, normally what equivalent to 1D, that target generally largely it completes. And if it breaks out further, there will be a one more level of move up, which is equal to the one more D again. The same distance it will again cover. That means same price point, it will again jump up. Okay. I will show you maybe some of the real-time example when that happens. Okay, so this is the example of nickel. Nickel is the one of the stock, or I can say under the commodity section, like a nickel, copper, gold, or silver. So these are the commodity options. So let me show you in the real chart how it looks like. So this is the chart pattern of nickel. Okay. And let me show you the formation, how where it is happening. I'll just delete some of the old. So when was the time frame? Let me go to the time frame. So it is June 2017. Okay. So on any chart, if you wanted to go to a particular date, okay, I will tell you a simple solution for that. So you can do a right click on any place, any free area in the chart. And in the right click menu option, there is a second option called go to date. If you select that one, a date window will pop up, and where you want to go, that June 2017. So we can okay, maybe first we can edit it to 2017, and I believe 7. So the chart will go to that same time frame. Okay. So this is the nickel June 2017, the time frame. Okay. And here there is a inverted head and shoulder formation we can see. I will just, to help you for the clear identification, I will just highlight. So if you look at this green candle with a little longer lower wick, so that is the bottommost point of this chart at this time frame. Okay, so I'm highlighting that bottommost will be the head formation, just to highlight. And as I was mentioning again, when you are doing the analysis or trading in the real life scenario, practically you don't need to draw each and everything what I'm drawing here. Okay, these drawings are primarily for the education purpose or for your understanding. Okay, in a real-time scenario, once you practice it, you basically don't need to draw these points. So this is be the head, and we need to identify two left and right for the shoulder. So here it is. Okay, if you look at this candle is again maybe I can say the higher low, but we are not considering this one as a shoulder, because this as I was mentioning, head and shoulder pattern. So there will be a kind of a significant distance. It's like a human head and we have a shoulder little away. Okay. At the same time, as you mentioned earlier also that this technical analysis is not a science, it is more of the art. So this candle will not consider for any solder. So for solder consideration, we need to consider, sorry, maybe this could be the one uh, ideal point for the appropriate solder, and another could be this one. Okay. So once you identify two of the left and right shoulder, and then next point we need to identify is the neckline. To identify the neckline, it is just opposite to the head and shoulder, and we are discussing about inverted head and shoulder. So we need to find out two lowest, okay, in this example, two upper point from the each shoulder. So from the left shoulder, if you look at, this will be the upper point, and similarly before the right shoulder, this will be the upper point. So these are the 2 points. If we combine them together, maybe I'll just delete it and just draw a new line. Okay, so it will be a neckline. I'll just extend it little further and just do the movement so that this line should touch these 2 points. Okay, I'll highlight with a different color. So this has formed the neckline. Left and right both the side. I'll just do some extension. Okay. So this is how we identify the head and shoulder pattern on the chart. Okay, I'm just repeating once again. Um, the ideals in an ideal scenario, this pattern should appear at the bottommost point. That means there should not be any price point or any movement further below the head. Below where we are identifying the head. Okay, and the two more higher low point, left and right, and the neckline. So how to draw the head and shoulder using the tool? So again here, if you look at 1, 2, 3, 4, 5, 6, there's a 6 toolbar option. Just click there. There's a small triangular arrow mark. So it will pop up, open up the toolbar option. And in this toolbar option, 1, 2, 3, 4, 5, 6, 6 option is head and shoulder. So if you click on this one, it will select the tool option head and shoulder. And to draw that, it is just similar to the head and shoulder. We can draw the inverted head and shoulder. Indicator will be same. So the same indicator head and shoulder will be used for drawing the head and shoulder as well as the inverted head and shoulder. Only the difference will be while keeping it on the chart, the click points will be somewhat opposite to the head and shoulder chart pattern. How we'll do that? I will show you here. So we'll again start with the left shoulder. So to start with the left shoulder, we need to look at from where the left shoulder is starting. So it is starting maybe somewhere here with the lowest price. Not lowest, basically the higher price point in this case. So this starting point will be somewhere here. This first click, and then we go to the left shoulder. That is the the bottom point of the left shoulder. The second click, and the third click will be where the neckline joints are. Third click, and the fourth click is going to be at the head. Okay, and the fifth one will be the starting of the right shoulder, and the next click will be on the bottom of the right shoulder, because I inverted head and shoulder, and the last click will be where this particular price line neckline is situated. Okay, so once we do this last click, this is how the head and shoulder looks like on the chart. Okay, so the main purpose of this pattern is just to draw and it will be a clear conviction that okay, yes, head and shoulder formation is there, and one can plan to enter at this candle. Okay, along with some more conviction when we are going to learn in the main seminar, where we are going to apply all this learning, or I can say the combination of more than one concept which we are learning at this point of time to take our trade with a better conviction. Okay, so I'm just removing this one. Okay, just keeping it aside to identify the uh, entry point and the target point. So as I was mentioning earlier, so this particular candle here, which is breaking out this neckline, will be the ideal entry point. And once you are entering into the market, that means buying at this particular price point, whatever the market price will be, okay, at this point of time. And the first target is going to be from the head to the neckline. So that will be it. This line helps in identifying the target. Okay. So because we are entering here, the target will be similar. I can say change in the price point, upward direction. So I'm just cloning it, copying and pasting, and I will keep it from the start of the neckline. And then on the top of this arrow, maybe I'll put one more horizontal line, the green line, the green horizontal line or trend line I have put, that would be the first target. Okay. And again, one can, watch out the further movement. Okay. So one can wait if there is a further breakout is happening, then after the confirmation of the breakout of this particular green line, there is a potential possibility or a high possibility that the price will go to the minimal same distance one more time. Okay. And so on and so forth. So it can go multiple, but one is for sure. Next move will depend on uh, you know it will confirm when the price will reach here. So first time it struggle a little bit, but again breakout happened. The second time, if you look at here, it is breakout happened, but it could not sustain for a longer time. The price point again came back and it took some rest for 2-3 days, and again from here it is reversed and again moved further. Okay, so then to start with, whenever you are finding this type of pattern, maybe we can think of taking the entry at this price point and then exiting maybe at least after one D or the similar distance. If you have more than one trade, okay, more than one quantity, maybe under strategies you can exit with a profit of 50% of their stocks or for 50% of the units, and for rest 50% you can wait till this price point. And again, we are going to learn more on the various exit strategies while we learn about the application. Okay, so this is all about the inverted head and shoulder. If anybody has any question on this particular example, feel free to ask. Okay, fair enough. I assume there is no question. You can ask, you can unmute yourself, ask the question, or maybe you can type your question in chat box also. Okay, moving further. So the next bullish reversal chart pattern will be a double bottom, or it is also called a formation of W or W formation. So again, this kind of chart formation happens at the bottom of the chart. That means it will be the lowest points where that particular stock or chart has moved, and once it is touching, I mean, a bottom point, maybe we can draw one resistance line, and again it may move up, and further again it is going to touch the same point or very near to that point. And when that phenomena happens, because it is touching bottom line, that is I mean, it will become a resistance line. So two times, and that is how the first bottom and second bottom formation happens, and it is treated as a bullish reversal chart pattern. Bullish reversal chart pattern means, to easy way to remember is, after the reversal it is going to be a bullish. Okay. So by any because of any reason, if you are not able to remember the name, that is absolutely fine. Only thing to consider is that if there are any price point is touching the bottom support line 2 times, there is a great or you know a big possibility to reverse the price or reverse the trend from here. And to get the confirmation, we need to wait till this price points reverse from here or bounce back from the bottom and reaches to the this point. So if you look at this example, it is coming at the first bottom and then going here. So the next black line, and that black line is becoming a resistance. So once we draw a resistance at this point of time, I mean at this level, and when the chart is again trying to reach at this point, we need to wait. And when this particular line is getting broke finally, or the final breakout is happening, in that situation, that particular price point become a ideal entry point. And then the first target would be the similar way, like from the bottom to the first resistance. If the distance is D, then most probably it is going to jump further one more level, which will be equivalent to D. Okay, so this is the very simple example of double bottom. And this particular phenomena is, again, as I mentioned, it's a very happy moment for the bulls. Bulls means the traders or investor who are speculating or predicting that price will go up. So it will be a, I can say the business time for them to enter into the market. And maybe somebody bears means a set of persons or set of traders or investors who are speculating that price will go down. So it will be not a good scenario for them. So I mean, an individual, whenever you are identifying or you are in process of trading or investing, so depending on the market situation, you can wear the hat of bull or bear. Okay, so it need not to be there with in the market with the same mindset. Depending on how the market's behavior is, depending on that, you can change your personality. Either you need to become a bull. That means you need to predict or speculate that the price is going to go up or going to go down. So let's take this look at this example in a real time chart. So the example was, we looked at the crude oil. Okay, so I'm just trying to show you the different examples in the form of chart. So far we were having a lot of chart which is related to the stocks. Just now we have watched something from the commodity. Commodity is nothing but either gold, silver, or metals basically. And crude is again the part of the commodity, but it comes under the energy division. So within the commodity, we have, I think, discussed during the market orientation session. So within the commodities, there are the precious metals, there are energy sector, the agri products, and so on and so forth. So we are going to look at the example of energy sector, that is the crude oil. Okay. So Let me find out that crude example for the easy purpose. Okay, this is the time frame of Feb 2016. So how to go to 2016? I will do a right click, go to, and then here click, make it 16, and it was Feb, make it 2. Yeah, so is this the correct one? Yeah, this is the correct time frame. Hopefully, yes. Which time frame we are selecting here? In the daily. Okay. This is not the right example, looks like. 1 second. No. So the chart is saved with the wrong name. The crude oil WTI futures. And we need to go to 2016. Yeah, here is the example. Double bottom scenario. Okay, so hope you can able to see my screen. And so during this time frame, this price point was the lowest one. So to highlight the support line, we'll put one support line at the bottom. Okay, so and it should be connecting to both the bottoms. Okay, so there may be a wick is little bit down, that is okay. So while putting any support or resistance line, the point we need to consider is it should be touching the maximum points. Here in this case, they are the only the 2 points, so we should be putting in such a way that it should touch or maybe sometime crosses one or other. That is okay. Yeah. So and the next level, if you can see where it went up in the middle, so that will be your first resistance line after support, and the distance, the perpendicular distance between this support line and the resistance line, that is going to be your target point, which we normally say as a D. I mean, just a distance, or it can have any name, that doesn't matter. The main important thing is that this much will be the target. So, and the ideal entry point could be when this after the bouncing back from the bottom or the support line, when the price is going to cross or the breakout of this particular resistance. Okay, so because this is the resistance, it might be possible that the price will touch this resistance line and again come back. So that's the reason we need to wait for the 100% confirmation. And here, if you can see, this is a big bullish candle, and which is closed on that particular day. So maybe we can wait till this day completes, or maybe we can wait till the big bullish candle is formed, and after that you can take an entry. And we'll learn more as I keep on saying that whenever we learn about the actual application of these concepts, we are going to learn more how to use it. As of now, we are just trying to understand how to identify the different charts. Okay, so this particular candle will be the ideal entry point. And for the identification of the targets, so as I mentioned earlier, the same price point or the distance, so copy and keep it from the top of this resistance line, and wherever it is reaching, that will be your first target. So one can take an entry here and possibly plan to exit at this point of time. So if you look at the price point perspective, here it is around 34. And I think this is an international market. Again, we are going to spend additional time about the how to read the international market and trade in the Indian one. Because in short, I will just tell you that, for example, the silver or the currencies or this crude oil, if you look at the exchange, I mean, we have discussed initially there are three exchanges in India, MCX, um, uh, BSE, or NSE, National Stock Exchange, Bombay Stock Exchange, and the multi-commodity exchange. But if you look at this particular chart is not from the Indian. This is the international chart. And if you look at here in the bracket, it is neither BSC, NSC, or MCF. It is CFD. CFD stands for Continental something. Okay, I'll let you know. As of now, I could not remember. So this is basically the international chart, and and this one is traded worldwide. So whenever there is an international chart, we will be doing the analysis in the international chart and taking the trade in Indian chart. So how that will happen, again, I will share whenever the time will come. So as of now, just please understand about this particular chart formation, when to take in entry, when to take exit. These are the couple of points you just need to understand. Okay. If anybody has any question, feel free to ask. Okay. I assume there is no question, or maybe tomorrow you can go through the recording, or if you have any question, it comes in your mind, you can post in the group. I will be happy to answer that. After that, we are going to discuss one of the very, very important chart patterns, and very, very rare also. Okay. So this particular chart pattern is the example of bullish reversal, and this is called a cup and handle. Okay. So why cup and handle this is called? So I will just try to explain. I will explain you based on this particular example. So what happens in such chart formation is that the chart or the price point remains almost a constant or very minimal appreciation, for a longer period of time. Okay. So if you look at this particular example, the price of this particular stock from this point, wherever my mouse pointer is there, it was almost somewhere 50 rupees. And again, okay, and if you look at the time frame, it was somewhere around 2009. So since 2009 till, we can say, nearly mid of 2019. Okay, so even it went down. Okay, down means I think it is around 10 rupees or 5 rupees something. But again, it reaches to the 50 rupees price point. And after that, again, it came down and made another one more time low, some 15, down from the 50 rupees, maybe around 100 rupees, 15 rupees, and again touched this 50 rupee price point, or even do a little breakout also, or the false breakout, because it could not sustain. Its price again came down and again touched this same line. So whatever the price point is happening in last, I can say since 2009 till mid of 2020, it is either price point is maximum 50 or below that. But there is some magic happens at during mid of 2020 where it successfully breaks it. Okay. So before that, just try to understand that, okay, why it is called a cup. So, it is in this chart, it is looking more of the, we keep the cup into the small plate. Okay. And then the handle of the small, that cup. Okay, so someone can say that, okay, it is more of the plate rather than a cup, but I mean, whoever has invented this particular chart pattern, they named it cup and handle. And that is how, to respect to his invention, we are continuing with that. Okay, the main important thing is to identify that cup and handle formation. And when that formation happens, in this example, it is happening after a very, very long time. That is from 2009 to 2020. You can understand it all took almost 11 years that formation to happen. However, when that formation happens, it gives a multi-fold result. So in this example, somebody could have made entry here, something around a 50 rupees price point, and after that, within a 6 month or so, it is keep on increasing. Okay, in this example, it is not the complete picture of the chart. I will show you in the real chart. Okay, that how much appreciation happened for this particular stock. So when the any such formation is happening, that is the one cup, which is a long time frame, and the small, comparatively small time frame, that is making the handle. And after that, the breakout could have been happened from this point as well, or maybe the next point. Okay, so again, both will be considered as the cup and handle chart pattern only. And okay, and how to identify the target, that is based on this particular resistance line. So once we combine the this price point where it is took a resistance, and in future also where it took resistance and came back, if we combine these two points, okay, that will be your resistance line, and the bottom of this particular cup. So that price point will be your starting point. So whatever the distance or the price between these 2 points, that will be your target. And after once you are entering into this trade, so equivalent to the same D, each D will be your target. So you can just we keep your first target here. If you find that okay, chart is going to go reverse, you can exit. If it successfully breaks out, you can choose to be in the trade and apply the same logic at each and every target price point. Okay, so when you keep on, and mostly I have seen this particular stock, it is the Tanla Platforms Limited. This is basically the IT company. Not very, very popular, but an IT company, and maybe that point of time in middle of 2020, I have traded this particular one. So I took entry maybe after a 1D, and then I exited somewhere around here whenever this is taking some resistance. So I exited here. But in the reality, it went up very, very high. Okay, I'll just show you in the real chart the power of cup and handle. This is the classic example of cup and handle chart pattern. Let me show you Tanla. Okay, so look at this chart. Okay, this is the real chart. So the formation is happening. I'll just zoom in just to clarify. So this is somewhere 2009. Okay, the price point remains almost, it is coming down. It went at times around, say, 1 rupee 78 paisa, so something around 2 rupees, right? And then again going up till 50 price point of 50 rupees, and which is again late 2019, and it again coming down because there is a resistance line. It could not able to break out, and again came down, and then tried breaking out here once more time. So that is where the first point, it is a big one. This is called as a cup, and the handle formation is happening here. So it could have been breakout, could have been to taken breakout here, this price point, but it didn't happen. Again came back, and the final breakout is happening here. So this particular one is called as a handle, and this complete long distance, long time frame is the cup. And if you observe, look, So as I said, the target will be that, okay, whatever is the resistance line, the depth will be the target. And if you can take the copy and keep it here, okay. So multiple of that particular depth will be your target. So you can just change it, okay, till the time the trend is getting a reverse. So I can apply 1D and copy paste and then maybe apply second D. Okay, take the resistance line. Again, you can do a copy paste like this. So you can keep on increasing the depth and the target. In this particular stock, it is started from 50 rupees somewhat. And if you look at the power of this particular cup and handle, it went up to 2000, 2078 or 2093. So around 2100. So 50 rupees stock till 2100, and look at the time frame, how much time it took. Okay. So the entry point is here. So I'm just putting one, taking one horizontal line. If you go to the second toolbar, there is a option of vertical line. Okay. So if you select that one and click anywhere in this particular chart or the area, it will put a horizontal line, and you can use the color options to make it different color of it. Right. So why I'm highlighting is that to find out the time frame. Okay, and there is one more tool that can use to identify the time frame is apparently I'm just trying to explain or teach you about the different tools that is being used. So from the top 1, 2, 3, 4, 5, 6, 7. Under the seventh option, tool option, there is a one tool called date range. Okay, two vertical line in between one horizontal line. If you select that one, and just to quickly know that, okay, how much time it took from the lowest point till the highest point. So I have selected the date range. I will click on first on this line and second on the line from where we need to calculate the time. So it is saying 77 bars. 77 bars means, so this is the weekly candle. Okay. So weekly candle means, I think the time frame is higher here. So 77 weeks. So 1 week is typically representing how, 52 week is representing an year, and then maybe 25 more. So around 1.5 year, this particular stock has reached from 50 rupees to 2300. So approximately how much? 42,000 times or 42 times appreciation. So somebody suppose could have invested here just 1 lakh rupees. So just after less than 18 months, that particular stock price could have become almost 42 lakhs. Okay, so that is the power of a stock market. That it is very much possible only in the stock market to achieve or to multiply your money on a limited period of time. Okay. However, the learning is more important. How to identify when to take entry, when to take exit. That is the most important factors into the stock market. So in the normal, we are keeping our money in the bank or the property or anywhere, okay, or doing any business. So why that is happening? Because see, any business in which we are applying our own, learnings or our own skill. Okay, so as much as learning and skill will apply, the more profitable that business will be. Anything we are just purchasing and selling, it will be very, very difficult to make a profit. Okay, because we are not adding any value on that particular product. For example, anybody is purchasing any item, let's say wheat. Okay, so no matter how much you purchase or how much from the growers or from the farmers, you may add able to maybe sometime 10%, or maybe we were a very great businessman, 15 or 20%, or little more than that. But he cannot, get it maybe from a farmer around 20 rupees and sell it by 50 rupees by multiplying 2.5 times. Very, very difficult. Because there you are not adding any skill. You are just purchasing it. You are not doing any processing, just packing and selling it. On a stock market, okay, there are many possibility where you can spend your time first to understand the study about the concepts, then applying them into the real-time market, and then do the exit entry or entry exit accordingly, and they get the maximum profit out of it. Okay. So this was the example of cup and handle. And I will show you one more. Okay, is there any question on this concept, the cup and handle concept? It is very, very, one of the simple one, but very, I can say rare scenario to occur. Okay, the few more things that, okay, whenever it is occurring, the longer the time duration of the occurrence, the greater possibility of it could be the strong movement in upside direction. So in this particular example, the Tanla platforms, this particular stock took around more than 10 to 11 years. Okay, and then when the breakout happens, it keeps on moving up and up. And that is the region of the very strong move. More than 40 times. Any questions on this concept? Okay, so the today's last concept of the day is called flag and pole. Okay, so the name is suggests. So flag and pole means in the chart, whenever we, how to identify this one in the chart is, so first example will be from the bullish market. Bullish market is the price is going up. So in that situation, what is happening is when a price is moving up and up, and we learned some of the previous session that there is no any movement which is happening in a straight direction. Okay, it will take a rest in between. So sometimes the resting of the stock happens maybe for a couple of days, sometimes couple of hours, but sometimes it is happening for a longer period of time. Okay, so in this particular example, again, I'm just taking the example from the same stock, that is the Tanla solution itself. Because I remember in 2000, when I took that particular trade, I think I exited somewhere when the price point is going, up and down. And then it was there in this same price range for a longer period of time. If you calculate, look at this chart is in the weekly time frame, and I think almost 5-6 months it was in a sideways. So how to identify that one is whatever it is neither moving up or down, it is between up and down, and it is, if you put a maybe horizontal, two horizontal lines, or there is a options to put a rectangular shape on the chart. Okay, so basically it is the price is moving between these particular up or support or resistance line. Okay, however, when it breaks in any direction, so in this example, it has broke on the upside, and when it is breaking the upper resistance, that would be the ideal entry point. And why it is called flag and pole is when the chart is doing the sideways move, it is kind of making a flat structure. The flat structure always may not be like a rectangle. It could be maybe somewhat triangular shape as well, sometimes a slanting or tilted flag or tilted triangle or tilted rectangle. So in all the situation, it will be treated as a flag. And the pole is from where the market started moving up. Okay, so till this point, price point, I think it was a kind of a flat. Okay, so it was again moving, going to the sideways, but from here somewhere this price point, this stock started moving up, and till this point, it was just moving up and up. But after this point, it went into some sideways. So from the lowest point till the topmost point, it is treated as a pole, and the rectangular part or the any area, rectangular or triangular, will be treated as a flag. So first pole formation and then the flag formation. So, but still the name is the flag and pole, not pole and flag. Sorry, there's a question from Hina. Will not the rise in the stock price depends on how much the company is taking the right step of growth after long lagging growth? Do we need to study the company's strategy of the growth also in such case? Of cup and handle. Okay, sorry, I just looked at the question right now. So I think I'm not sure you were there as part of the initial market orientation session. So where we discuss in detail that okay, when we are learning the technical analysis, um, ideally we don't need to know about the company. Okay, because whatever the company decision will be, it will automatically reflect in the price action or the price pattern of the chart. Okay, so if someone knows, that will be the added advantage. um, but even if you don't, you or someone don't know about the company, what is happening there, and if you are following the chart, in the chart itself there will be a certain sign, with that is what we are learning, to know that okay, what is going to happen in future. We can speculate. Okay, and based the stock market is specific analysis is, in summary, it is a speculation only. Two kind of speculation. The price is going to go up or going to go down. Okay, so to answer your question, ideally it is not needed. Okay, as part technical analysis doesn't care about what is the happening inside. However, if you know directly or indirectly about the company's future strategy plans or the growth plan or their vision, that will be your added advantage on your it will add your into your conviction to invest or trade accordingly. Hope I am able to answer your question. Hina,
Yeah.
otherwise you can unmute yourself and ask.
Yeah, thank you.
You're welcome.
Hello.
Yes,
Yeah, thank you. Thank you.
you're welcome. Okay, so coming back to again flag and pole. So this is how the flag formation is happening, and the pole is the lowest point till the topmost point of the flag. Okay, so again, its name is flag and pole. Although the pole formation is happening first and flag later. How to decide the target? So okay, so whatever the height of the flag. So there are the two views. I mean, from the analyst perspective, also in the market, right? So okay, so another questions I think we are getting on the cup and handle. There are thousands of stocks listed. Then how we can choose stock to analyze the chart? Good question. Uh, so this question is from Indu. Okay, so good question, Induji. How we can identify the charts are, so I have already shared the list of companies under Nifty 50 or Nifty 100. Nifty 100 is the top 100 Indian companies. Okay, that makes Nifty 100. And okay, and there are many other sources. I'll going to share all those sources with you when we are going to learn about the application. And from there you can select, and there are the screeners. So I will maybe make a list and share with you that what are the different sources from where you can select the chart. So see, selecting the chart is, if I take the real-time example, it is equivalent to selecting the life partner. Okay, so there are many people in the world, and we'll select. depending on our need or liking and disliking. Similarly, there are thousands of the companies, and I will give you the source. Okay, you can select, and you can select the any company, or at least look around yourself, and okay, you are using maybe something or other. You are using at home the biscuit name Britannia. So Britannia will be another company. Any IT company, you bank with the ICICI or SDFC or SBI. Those are the company. The producer of electricity, the NTPC. So similarly, they start with your home. That is whatever the company, that the products that you are using, it is good or bad. Depending on that, you can simply also select the stocks. But I will definitely going to share the long laundry list of the companies where you can select. Okay, and how to select also, I mean, we can discuss when we learn about the application or making the portfolio, etc. So don't worry about that. We'll share the enough information. Hope I was able to answer your question. Okay, great. You're welcome. So, so in the flag and pole, so there are the two types or two methods through which we can use the target. So the first one is that the height of equivalent to the flag. Okay. So if you this is the height, and the similar height, if you can keep it the price point, that means this is the small arrow. Okay, so this is the height, and the same arrow, if we can put it up from where the breakout is happening, or the top of this resistance line where the flag formation is happening, that will be your first target. Okay, and the second, that will be the equivalent of the flag, and the second target would be the length of the pole. Okay, so this is the length of the pole, and again you need to keep it on the this resistance line. Okay, and that will be the formation of your second target. So an ideal entry point could be this one. Maybe I'll just show you in the real real chart, that would be more clear. Okay, and the solution. Okay, and the example is the same. I will take the example of the Tanla platform itself. So if you look at here, okay, so suppose in Tanla solution, somebody missed the taking entry here. Okay, and understand that there is another pattern called flag and pole. And by the way, this flag and pole chart pattern is an example of the continuation pattern. So during the start of the session, we learned that we are going to learn about two kind of chart: bullish reversal and the continuation chart pattern. And flag and pole is the example of continuation chart pattern, and in the continuation, that is the bullish one. Why it is called bullish one? Because before this flag formation is happening, the trend of this particular stock was uptrend, that is bullish. And why it is called as a continuation pattern means that whatever during the flag formation, the movement of the stock is going to be sideways. Okay, so whenever the sideways movement is happening, most of the scenario, you need to understand that once the sideways move will end, the stock will move in the direction of previous trends before making the flag. Okay. So in this example, the before this flag formation happened, so there was a chart movement, or the price was moving up direction. So that means once the flag formation will end, the chart is going to move into the up direction again. So that is why it is called as a continuation. So whatever the previous pattern, it will follow. It is going to follow the similar pattern. So coming to the real chart, so this is the example of Tanla platform. So if you look at this price point, okay, from here I'm just keeping it. I'll just remove it just for better understanding purpose. So this is where there was some resistance and it broke that particular resistance and price started moving up. And after this price point, where I'm just keeping it, okay, this particular, so as we learn the support and resistance, so this is acting as a resistance, these 2 points. So I'm just keeping one support line, sorry, resistance line or the trend line here. Okay, and then either you can do, so if you select the fourth one, there is a option called rotated rectangle or simply rectangle. You can select any one. Suppose I have selected rectangle and just click on 2 places. Okay, horizontal and 2 places, and then here click on any one point and move this down. So it will draw a horizontal kind of rectangular shape. Maybe if you don't like the color or just to look at the inside of the color, you can highlight with the some lighter color. Okay, so why I have taken this particular, I mean this long, because till this time the movement of this chart was in a sideways direction. So it's just for the identification purpose. Once again, I'm saying that whenever you are doing the actual trading, when we do practice after that, for it is not necessary to use that. It is only needed for me to explain you. Okay, that okay, this is how you identify the flag. And then how to decide that once this formation is happening. So I'll just remove it here. So this particular line, maybe I'll just change the other color. The pink line, it is basically the resistance line. So to take the trade or investment, we need to wait that, okay, till the time this is breaking out. So that, okay, when it breaks, because if it touches, it may possible that it will come down again. So here it is take a resistance, came down, it again tried to going up because, but before touching this price line, it again came down. This is the third time, went up, touched and came down. This is the fourth time. So in the after the fourth time, it is going to do the breakout and price is moving up. Okay, so how to decide the the targets? So I have, so this was my latest, the lowest point. I'll just mark it by combining all the lows here. So here we need to draw a trend line which is touching the maximum point. So if I draw like this, it is touching all the 4 points. So that is the one of the good way of putting the trend line, support or resistance. That could be anything. So from the support line, bottom support line of the flag till this upper part of the flag, that is going to be your height of the flag, and it is going to give you the first target. That means if somebody is taking the entry here at this green candle, okay, then they can plan to exit. I'll take it at this price point. That is the first target. Second target is the flag, sorry, the pole of the flag. So as I mentioned, the pole will be the distance from where this price starts, that is this particular support, until the time it is starting to make the flag. Okay, so this particular distance or the height or the move in the price point is called as a pole. And then if I again keep from the top of this resistance line, and that will be your second target. Okay, so in the same stock, we got a 2 possibility. And this is flag and pole is not a rare one. We will keep on finding in a many, almost all the stocks are stripped. This flag pole formation is happening. Okay, and that is how we can identify. Maybe I'll give you another example of flag and pole if needed. Or maybe only this price, this particular time, you can just understand that sometime it may be possible that the flag formation might be happening. This is just an example I'm just telling. Suppose these two candles are not there. So it could be a slanting line, or it could be something like this too. Okay. So flag could be of any shape. It could be a kind of a triangular shape, or it could be a rectangle shape, or the a square shape. It doesn't matter. In all the scenario, it will be flag and pole only. So if it is rectangular one, then the first target, rather than you need to decide based on the uh, high highest width, which side is the having the width of this particular flag, that particular height will be treated as a first target. The flag could be sometime like this also, okay, like closed, or is kind of a wedge formation. So first narrow, and further it is going to be wider, and whatever the wider side, that particular distance is the will be your first target, and the second target could be equivalent of the pole. Okay. So that's again simple flag and pole. However, if anybody has any question, feel free to ask. I would be happy to answer. Okay, great. Assuming no question. So last concept, we have overshooted few minutes, but this is just the last concept of the call bearish flag and pole. So in this example, what is happening that rather than the price is moving up, the flag and pole formation is happening. In this example, the flag and pole formation is happening when the price is coming down. So this is example of ONGC, our own Indian company, Oil and Natural Gas Corporation Limited, India. And if you look at the topmost point here, from here, the price started falling finally. I mean, it started falling from here also, but from here it went up. So we are considering that, okay, from here it is started falling, and this is the actual fall has started from this particular price point. And how to identify the flag? So if you look at when the price point reaches here at wherever I'm keeping this big pink arrow, so it took a resistance, sorry, it took a support from this place, and then it started moving up and down in a sideways direction. And again, this chart is the weekly time frame, so you can understand that, okay, 1, 2, 3, 4, 5, 6, 7, around 8 weeks, it was like in a similar situation. Almost no any much price movement. Okay. So to draw this flag, if you see, I have made a slanting line up and slanting line down by covering or connecting most of the candles or their wicks. And once it is breaking down in downward direction, or okay, towards the downside, that will be the ideal entry points. Okay. And the first target could be, so after where this particular pole or the price that took a support from the topmost point of this flag, that will be your first target. Okay. So here, why we are not selecting just the equivalent of this particular flag, because there is I mean, better resistance here. Okay. And because of that, rather than entering here, we should be entering at when this resistance is getting breaked. Okay. And then we can trade for two targets, that equivalent of the height of the flag, that will be your target first, and equivalent to the height of the pole, that is going to be your second target. So somebody is trading maybe with 10 quantities or maybe 100 quantities of natural gas, and if you have sold the natural gas here, you can take an entry either target 1, or have little more patience and take a exit at target 2. Sorry, here both in both the cases exit is happening. So this is the example of the classic example of the short selling, where as I mentioned earlier also, that in the stock market you will not gain the profit only based on the uptrending market. You can also earn money, or I can say good money, based on downtrending market too. Okay. So yeah, this is the last concept of the day. Maybe I'll just quickly share the example in a live scenario, ONGC. Okay, so this is the example I was just showing. Okay, so this is the example where the top point will be this one, where the prices started falling, and then bottom will be not bottom, basically the intermediate point where this price took some support, and this is the flag formation is happening on the way. Okay, if I connect this particular three lines like this, and the bottom also by connecting multiple candles. So I need to draw like this. Okay, one or two candle will be kind of a false breakdown or breakout. That is okay. So this is the formation of the flag, and to decide the target is from top of this flag. So this is where the top price of the flag is there. So from there, just to put a horizontal, not horizontal, vertical line. So this will be your first target from this particular support line. So I'll just copy and paste. And here, this is your first target. And second target will be the equivalent of the height of the pole. And the height can be calculated from here, from the place where the price started moving down. And once the first target is achieved, look for the second target. And I'll just put, and from the same resistance line, I will put one more arrow that will give you the second target. And to verify with the price line, you can just have a horizontal trend line. Okay, that is how we can put a target. Okay, so somebody can take an entry here that is around 290 rupees, and then exiting is final exiting 132. So almost 90 rupees profit. Okay, per share. So that what that means is somebody if invested maybe 1 lakh rupees, then your 1 lakh rupee will become 1 lakh 90,000. Time duration, if you wanted to know that, okay, select the time range, and this is the entry point. That means somewhere here, if you just click it and go to the this point, right, where it went at the lowest point. Okay, so the timeline is almost 45, around 315 days. So less than 1 year. So this is the another example where in a less than 1 year or around 10 months of time, your capital is going to appreciate about 90%. Okay, so 1 lakh will become 1,90,000. So that is how this is another example of the great power of the stock market. Okay, so we have completed the today's session. Okay, in case of anybody having any question, feel free to ask. I will be happy to answer them.